Do you think there's just so many theories that one of them has to be true at this point?
Well, I think that's it's funny because I'm only laughing because like I'm laughing at myself and how many hours I've dedicated to reading pretty much every one of these series under the sun. To me, it really boils down to what Roy and Kitty saw though initially, and like let's just take Ryan Cohen, like let's just trust that he's transforming the business, which I believe he is, and all those good things. But if we're just zeroing in on Roy and Kitty and any theories regarding him, I think there's multiple things at play. And I did make a bold prediction on my X account today about what I think he might be doing now. I think the most interesting thing to me is that he is, if you've studied his posts before, if you've studied his live streams from predating when GameStop had its first big run up in January of 2021, you see how calculated he is. Like, just pull up one of his investment spreadsheets that he used to use, and you can find these on Reddit, by the way, if anyone's curious about these things. Like, there is so much information in those spreadsheets. He knows like everything about a company or an equity like that he was potentially investing in, right? So to call him and say, oh, he just saw the RSI dipping on the chart and he thought it was repeating, like that's probably one of the things he saw. He probably also saw swaps coming due literally to the day in May, right? There was a couple, I think a handful of days in May and then another one in June. The Chewy play is another card in his deck, in his Uno card deck. We'll use a reference there. Because what was he doing with Chewy, right? Was he just mimicking Ryan Cohen's kind of style of purchasing and transforming? Was he blowing up the basket, which I think he absolutely is doing or has done, and now it's a ticking time bomb? Or was he banking on Chewy swaps being converted? And this one's probably the most outlandish, but I think there's validity to this. Um, there have been computer programmers on Reddit digging into Chewy swaps that are due, coincidentally, that have come due in the past 2 weeks. GameStop, coincidentally, in the past 2 weeks is up 30% and change, right? Did he manage to flip Chewy swaps to have them due on GameStop due to ETF rebalancing, which, if you've been following the saga, ETFs that hold GME also hold Chewy. Okay. There's a lot of things at play. And to your point, like which one of the theories is it? I think it might be all of those everywhere, every time, all at once.
Yeah, there's so many possibilities. It's so weird. It's so difficult to like try and yeah.
But I think what's interesting about this time is that the same signs from the run up in late 2020 and early 2021 are there. The fails to deliver on ETFs. I don't know if you saw this, but on IWM, there was over $1 billion of fails in September on one day. Over a billion. And if you just look at the data, and I'll pull this, I have it up in front of me because I want to be specific here.
Yeah, share your screen
If
if
you
you want.
So there was on September 20th, and this is from chartexchange.com. September 20th. Okay, and this is all the time around when people were speculating that Keith Gill sold Chewy, right? And then he had to file, I think, was it 45 days later or 35 days later or something? There's so much T 35, T plus 69, T plus 4. There's so many things. But there was $1.2 billion of fails on IWM on September 20th. That is absurd.
Wait, hang
That's
on.
not just
Just for GameStop.
no, for IWM.
Oh, okay, sorry.
So, and that holds all the big
Yeah,
boys.
yeah, yeah.
That holds all small caps. Okay. Why on earth would there be a $1.2 billion in FTDs that day? And then if you look at the next day, they claim to have closed out all but 4 million of those, all but $4 million of those, which I'm sorry, but that just can't be. It cannot be. They must have had to create relentlessly, borrow against that, and then report that, hey, we found all these and everything's all tidy. I don't believe that for a second. You
Mm,
saw the same thing on XRT, not to the tune of $1 billion, okay, but hundreds of millions of dollars. It's huge. It's huge money. And they're just playing, in my opinion, they're just playing hot potato with these ETFs, where they're going to fail the ETF, they're going to redeem the ETF, they're going to create the ETF, and then they're going to borrow against that creation, creating this kind of infinite hot potato pattern where and you want to talk about MOAS. I'm not even a MOAS guy, okay, but that is a MOAS rocket launcher. That's bigger than SpaceX. Like that thing would zoom. If a fraction of those, if you were even held accountable on a fraction of those.
Yeah, the problem is that there is no holding the account on fails because, as Dr. Trimbath has pointed out
Yeah,
numerous
no,
occasions, they choose
and
to
that
roll them over forever.
like
It's infuriating, though, right?
exactly. But I think that's why it's an important piece of the puzzle, but it's not the puzzle. It's important to watch that because you can get a sense of when they will have to redeem those, when they will have spikes in price, when T35 plus C or whatever it is now is, pertaining to that situation where it might impact the price of the equity. Like that, I think is important, especially if you're day trading the stuff, which I don't do now. I do trade calls on GameStop. Um, but you have to really look at all these. And I think cost to borrow is another one I wanted to touch on with you too, where you saw the lend pool completely drain at multiple points. And it's obvious what they're doing with that too. You can see them do it every Sunday now. It's the same exact thing.
Hmm.
When futures open and a few hours before the Robinhood, I call it fake trading. It's the overnight hours. It's a complete scam. And I have no evidence of that. I don't want any legal penalty. It's, in my opinion, I think it's a scam. You see the same thing. You see them borrow about 500,000 shares of GameStop on Sunday. And this is just from Interactive Brokers. They borrow out 500,000 shares. All of a sudden by 9 a.m., the shares are returned and GME is down in pre-market like 2% on like hardly any volume. And you just have to think like, that's interesting. And yet the borrow fee goes down and down and down. And it's like they're begging people to borrow those shares, which in my opinion, like might not even exist. It's like, all these conspiracy theories, whatever you want to call them, it's all possible.
Yeah. Yeah, I just wanted to read a little bit from my book. Hang on. That there was when I was talking to trade spotting Jamie, what an absolute hero that he is.
Legend, by the way. Talk about an OG and TA. I've learned TA from a lot of his stuff. So
Like even like just the way he describes, and that's what I want to read. The way he describes like trying to understand what the other person on the other side of a trade might be doing, and like the battles that go on like between hedge funds and institutions, maybe even just like individuals like who are directing a trading strategy. So it says you anticipate that person lying to you and to manipulate you to take advantage of their own trade, and so you work around that. There's that cat and mouse game everybody plays all the time, apart from the odd one or two who probably never do at the end of the day. It's layers within layers within, and then um, he goes on to say like what's really going on in the market you don't see, you know. What's important when you're in hedge fund mode is not to do anything remotely truthful because the truth is so against your view, and it's important to create a new truth to develop that fiction. It's like
that's literally what's going on. Like, and that's why people saying, "Oh, they cleared those out," or "Oh, they returned all this." It's like, no, I don't think they did, but they're creating that truth, and then the data is telling us that that's truth, but yet I am hard pressed to believe that truth.
yeah, and honestly, like, and this is something I want to ask. Is like, right, okay, so the we know the FTDs can be rolled over to forever, and we know that liquidity is the goal forever, and ultimately we really don't know how many shares are floating around, and even then, if we did. If you want to buy something, it's always available because the market makers just will print it out of thin air in order to like satisfy that infinite liquidity. Like, is there anything real in the stock market? Like, to what extent do you think that it's actually like an accurate reflection, like broadly, of like the price of a stock? Like, just zooming out from this one individual where
Mm-hmm.
we've all been hyper focused on it, right? We've been watching how non-real the price can be. Like how widespread is this like fabrication?
Well, I mean, to give a lazy answer to start, no, I don't think much of it could be real. However, I think there's examples of this. Like Tesla is a great example of what I think GameStop is kind of experiencing to a certain degree now, where you had this tremendous brand that wasn't wildly popular, at least in terms of driving sales to their product, right? And you had a leader with this very strong and almost crass to certain people. I think Elon's tremendous, but to certain people, he's crass. Of a company that was shorted into Earth's core, and instead of just backing down and saying, okay, I surrender, we're going to let the company go bankrupt, Elon fought for his company's life, for his employees' lives, for his shareholders' lives, and said, no, we are going to stick at this because this is a great company, it's a great brand. And eventually Wall Street had to change their tune on Tesla. Go back to Tesla in 2019 and look at the stock price. Your jaw will hit the floor. Okay. Look at what happened on that run up. And what changed that and what became more real of Tesla is that their financials started improving slowly but surely. And yes, it was still highly speculative and you're still very forward looking. Remember, that was the era of everything forward looking ran thousands of percent. But Tesla happened to run 2,000% over those next 2 years. Why? Because Elon finally was able to say to Wall Street, they have nothing against this company now, and it's time to start buying in. Or in GameStop, to quote a GameStop line, where are the shares? It's time to buy the shares. And I think Ryan Cohen is doing that same thing to a certain extent. And obviously they're not selling EVs, and I hope they don't get into EVs. But you know what I'm saying in terms of like, it becomes more real when you have a legitimate case to say, we have transformed this business. This business is not at risk of going bankrupt. And this is going to be an industry staple for decades and decades and decades to come.
Yeah, I guess that's kind of what he's trying to do ultimately, is to like reroot themselves into the foundations of American retail.
Yeah, I think he's doing a good job. I mean, look what he did with Chewy, right? Like you could play devil's advocate and say, oh, why not just get it on Amazon? But Chewy has found a way to keep niching down their revenue streams. So now you can order like vet prescription only medication and get it delivered to your door in like 24 hours on Chewy. Like you can't do that on Amazon. And I just think that's one of Ryan Cohen. He's got his fingerprints on that stuff.
Hey everyone, thanks for making it right the way to the end of the podcast. I love that you tuned in this long. Do me a favor, hit subscribe, because 80% of you bastards are not subscribing, but you're watching my videos. See you next time.